Here we have the current stock market analysis for SoFi Technologies Incorporated, stock ticker SOFI. Before we begin with today's chart analysis, if you find this educational material to be helpful in your trading, please remember to click the like and subscribe buttons and leave your thoughts below in the comments section so that other traders will be able to find this information more easily on the platform. So with this chart video, what we're going to be doing is looking at a bit of a longer term view here to try to assess what could likely happen next. We have seen some price failures after reaching new price highs, breaking that $8.30 resistance zone that was generated roughly during the end of August. So now that we have seen the rate cut event risk sort of move into the rearview mirror, I do think that a lot of the speculation that surrounds that aspect of the market could start to slow down, although not completely. There is still possibility for further rate hikes down the road. The inflation situation in the United States remains a mess and could continue to be a mess for quite a while. We're also coming into a presidential election quite soon. So there are several factors at work here that could start to sort of influence sentiment here and change the outlook for this stock. But currently, we are going to continue looking at these price levels here because this will give us the easiest indication of deciding whether or not trend activity has actually become bullish or bearish. So specifically what we're going to be looking at here will be this most recent price movement into the upward direction here. So what we're going to be doing first is redrawing these Fibonacci retracement zones so that we can start to look at this near-term trend wave here in a bit closer detail. Now that prior high has been broken, we can start to disregard that trend wave itself because it's unlikely to remain the most dominant influence for this stock going forward. So here what we have is a new price high that comes in at roughly $8.52. So we can see this price movement here, and we can see that this near-term trend wave movement to the downside has now broken through the 23.6% Fibonacci retracement of this rally from $6.75. So what this tells us is that we're already starting to break through some fairly significant support zones. And the next level that I would be watching to the downside currently comes in right around $7.85. The reason that I would point to this area comes from the fact that we are currently looking at a price confluence between this would be the 38.2% Fibonacci retracement and this ascending yellow line here, which is the 20-period exponential moving average. So we've got a confluence of events here, more than one technical signal that's sort of, matching in the same area here. So we will be looking at that level as a near-term price target to the downside. The main question at that point becomes whether or not share prices are actually able to find some support in that area. When these types of price zones are developed, there is a presumption that these price zones will hold because it's more likely to occur than not. However, this does not guarantee that prices will be contained within that support zone. And then the suggestion then becomes that, if we see a break below that level, that bias starts to reverse. So it's important in both directions is what I'm trying to say. We can either see a bounce off of that area or we see a significant break coming in that area. And then both of those events give us different pieces of information. And they're both critical and they're both important for figuring out what is most likely to happen next. So, we could start to assume that share prices will bounce off of this $7.85 area roughly. I can mark this on the price chart here. So we've got roughly a support zone coming in at roughly $7.85. We can suggest that share prices could see a lift here, a bit of a bounce. And for people that are looking at shorter term time frames as a way to trade the market, and there's nothing wrong with that. I don't see any problem with that. But if you are looking to trade this from a very short term perspective, say on a 5-minute chart or a 15-minute chart, the presumption here would be that you could possibly buy into this area. Look for a price bounce here, and then possibly either, take profits into a support level that was resistance previously, or target this near-term resistance high, which comes in at $8.52. So that could possibly lead you to take profit, maybe just below the $8.50 area. If we do, however, see a break below here, you would want a protective stop loss in this area. Number one, if you were trading from the long side from a short term basis, but if we do see a break below here, then we have to start to look for areas lower, which could then start to act as support in the future. So if we do this, the next level that I would be watching would be coming in right around 742, just above the 740 level. So let's just mark this area in here. 743 marks the current 61.8% Fibonacci retracement of this ascending price move. And the reason that I focus on this area specifically comes largely from the fact that the 50% retracement is this middle zone here, but the 50% retracement is not actually based on the Fibonacci sequence. If we have any math majors here, this 50% number is not actually a Fibonacci number. 23.6%, yes. 38.2%, yes. 618, yes. It's probably the most important Fibonacci number. 78.6, yes. These are all Fibonacci numbers, but that 50% number is typically plotted with, it's typically part of these, charting applications. You'll see it almost everywhere. I mean, I don't believe I've ever seen a Fibonacci retracement tool that does not include that 50% number. But that's not actually a Fibonacci number. So let's just make sure that that's understood. So in many cases, I will just simply skip over this area. It's possible that you could start to see some support here because we are seeing this rising 50-period moving average that's starting to come into contact with this area. So again, you do have a couple of signals at once here, but I would prefer to see as a downside price target would come in at the 743 level first. Because this is the 618 retracement. That is the most important Fibonacci number. That's what most of the sequence is based off of. And in addition to that, we have these two rising exponential moving averages that are starting to come into contact with this area. So remember, these are moving averages, so they will continue to move. And as we can see currently, this 100-period EMA and this 200-period EMA are both quickly coming into contact with that 618 retracement, which is found right just above the 740 level. So here are some of the levels that I would be watching to the downside. If we see a break of 852, that would be a bullish event. Here's the current stock market update for SoFi Technologies Incorporated, stock ticker SOFI. Our high-value trading strategies membership is currently available for a limited time for only $9.99 per month. These high-conviction investment strategies are characterized by superior risk-to-reward metrics that target massive, market-beating returns over time. Join now to outperform the market. Lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership and start trading stocks with the pros.